You know, I had to start off with a smile. Yes. Oh, be laughing at me. It's what I say. It's what I do. Oh, my computer about to die, so let me start off with a plug. Or this goes off. So, good morning, good afternoon, good night, good evening to everybody, wherever you are in this world. It is Real Estate Tuesday. Some real estate updates for everybody, national and also uh and it did something to my iPad. Hold on. Like, what is going on? And it made it a whole nother tab. Like, how did I do that? But anyway, if you don't know who I am, my name is Toria Howard, and I'm originally from Detroit, Michigan. Now reside in Memphis, Tennessee, where I'm all things real estate, commercial and residential. And I'm here to talk about real estate today. I'm a realtor with EXP Realty. I also do commercial loan broker and business funding broker, and also in the financial literacy space. So let's talk about it. So if you're watching my live, drop a one in the chat. If we're watching it live, drop a one in the comments. If you're new to my live, drop a two, and then if you're watching the replay, drop a three. And I really appreciate you guys jumping on. So let's start off with the houses that are come for sale, the new listings this week. Like I said, people still moving and buying and selling in Memphis. Hi, Carlos. I can't see. Thank you on Instagram. Appreciate you. I can't. My eyes. I can't. I got the light in my eye. I can't see how to pronounce your name, but I appreciate you, Queen. So, how many houses are new on the market in Memphis? 294. That's up like 30 from last week. And Yete, okay. Well, hope I said it right. And Yete, thank you for the breakdown. And Yete. So, yeah, so people still putting their houses on the market up to like 30 from last week. We had 209 sold in the last 7 days, and we got 169 pending. So meaning that we have some people that are about to go to the closing table. So congratulations to them. But we still had 209 houses sold last week during the last week. So people are still moving and buying and selling. So you should not be afraid to jump into this market. You just have to be creative. Get with a real estate agent and figure out a strategy for you because it's still possible, even though the interest rates are high considerably. But the thing about real estate is that asset is going to continue to appreciate. They're not predicting any type of crash or anything. So, you're not going to lose any money on this deal. Like, it's an asset. It's a good asset debt. I should say. I should say good debt asset. I said it backwards. But you need to tap into this market, get into it because it's going to be some houses coming on the market with the foreclosures that's going to come down. This is just talking about in Memphis. It's probably, like that across the board, but I'm just speaking in Memphis because I've seen a lot more notifications for the foreclosures. So you can even wait for foreclosure if you want or jump into what's already available. But a lot of people are not want to be creative when it comes to home buying. Like I told somebody the other day, she was just like, I can't find nothing in my price range. Yes, you can. You just don't like it because it's ugly right now. So think about getting the ugliest house on the best block, taking a FHA 203K loan, get it all of the get, and then you can purchase it and fix it up, and you get all the new stuff in there that you want. It's like a brand new house. So, and a lot of people are not privy to that or not getting that information. So that's one thing that you can do. So let's talk about the interest rates this week. Kind of the same from last week. So like I told you before, if you have a 740 to a 850, the average, this is on average. This is not in Memphis. Different lenders have different rates. So some lenders have rates still in the fours. So you just have to see what rates are out there. But this is the average for, I'll change this to, wow, we'll put it back. It seems like the higher the house, the 300K and above gets a better interest rate. That's interesting. So if you have a 740 to an 850, your interest rate is going to be the same. It's going to be 5.871. So if you go down to a 720 to a 739 credit score, 5.96. So as you can see, the lower your credit score, the higher the interest rate is going to be. If you go down to a 700, that's a 6.3, 700 to 719, it's a 6.32. So if you see the degree in change, higher credit score, the better your interest rate. So just be mindful of that. 700 is still good credit. But of course, you on a scale of 850, you still missing 150 points. So that's the difference. 680 to a 699, you at a 6.6. So that's a 0.3% change. And then if you add a 660 to a 679, you had a 7.1. This is on average for the nation. Like I said, different lenders have different rates, but it's still predicated on your credit score. So you need to make sure that you know what your FICO score is. I'm not talking about Credit Karma. I'm not talking about Credit Sesame. I'm not talking about none of that. It's your FICO score. So go to Identity IQ, Smart Credit, Experian, one of those type of sites that you get your FICO score, because you need to know your FICO score. Credit Karma is a Vantage score. That is not the FICO score. That's not what lenders look for. So you need to make sure that you know your FICO score, not the Vantage score. That's the difference. So know what's on your credit report as well. I'm going to go over that a little bit later. So like I said, 669, you had a 7.1. So you was at a 5.9 at a 740 to 850. Now if you go down to a 660, it's always a 7.1. This is the national average. So if you 640 to 659, it's 7.2. And if you go down to a 620, 639, it's 7.2 still. Now you still have some lenders that do a 580. I don't suggest that you get a mortgage at 580, but sometimes you sometimes you have to do what you have to do if you have the money. Now you don't qualify for most lenders. You don't qualify for the first time home buyer program when you at a 580. You have to be at a 620. Some of them are 620. Some of them have even jumped to 640. So you just have to talk to a local lender. It's good to go to a local lender, not the big banks. You know what the big banks are. I want Big Brother to shut me down, but you know who I'm talking about. B of A's and the Wells and all of them. Skip them. You need to go to your local credit union or a national credit union or a local mortgage company or a local bank. They will give you more bang for your buck, and you'll qualify for more. Establish relationships with these banks, and you'll be able to know their qualifications, and then they'll be able to I don't know why my connection went out. That's crazy. They'll be able to afford you more. Now, I can tell you this from experience. I had a client who went to a big bank, B of A. Okay, said put it out there like that. He only qualified with them for 110,000, and he was having the hardest time finding a home that he liked. And he was trying to settle, but he just couldn't. And I said, you know what? Let me look at you. I asked him. Most realtors don't do this, but because I am in the financial literacy space, I wanted to see, what he made and what his credit score was. He had a 750 credit score, and he made like $55,000 a year. I said, no, this don't match, because of the fact that he had no debt, like no real debt. Like he didn't have a car note. Well, he did have a car note, but it was real minimal. So his debt to income ratio, it just did not match. And he had a high enough credit score. So I told him, I said, based on this, I said, I'm not a lender. I gave him some suggestions. He went with his own lender, but he went to another local bank, and he ended up getting $200,000. He got $90,000 more. Yes, gotta have a healthy DTI. Yeah, most religions don't do a lot of things. Yeah, you're exactly right. They don't. There's a lot of complaints about realtors, and it's sad and unfortunate, because we have, some realtors give us a bad name, and it's hard to trust people. That's why a lot of people want to sell their homes on their own, but it's not wise to do that, because you don't know the market like we do. Well, some of us that study it, I should say. But yeah, just be mindful. Trust, go to those local banks, go to those local credit unions or national credit unions that you get more for your buck instead of, especially if you like us, you know, it's still some type of redlining going on. I witnessed it for myself because there was no way. Because when I first bought my home, I was only making like, how much was I making? I was in the 40s. And I qualified for like, I was like low 40s. I qualified for 160. So I was like, he was making more than I am, and he only qualified for 110. I was like, no, that the math wasn't mathing. So I told him to go, and he did, and he's successful. And now he's in his home. So that is awesome for him. First time home buyer at 25. They're saying the average home buyer right now in the millennial age is 35. So I helped a young man at 25 get his first home. And it's 4 bedrooms, 2 bathrooms. Holla at your girl. Um, let's see what I want to go to next. I want to go with the sellers tips first. Yeah, I'll go to the homeowners tips first. So no, I'm gonna go. I'm gonna talk about Memphis. I said that first. So talking about Memphis, people have their ideas about Memphis, but I'm gonna talk about something good, which is one of my favorite things, which is ice cream. Yeah, discriminatory lending, it is out there. So I don't know how many of you love ice cream like me, but I'm a lover of ice cream. But I haven't been eating much lately. I did have a little soft serve today. I'm sorry. I'm on this health journey. I got like 22 more pounds to lose. So, I got this dress I'm trying to get into, but that's a different story for a different day. So just talk about some of the favorites, that I've been to, and some of the favorites around Memphis for ice cream. I don't know how many people love ice cream, but I do. So Jerry Snow Cones is one. They the ones that do the slush and soft serve together. Good. You got Margie's 901, Sweet Noshings. Now I love Sweet Noshings, but when you go in there, make sure you don't take no children or no people that love just people that would got diabetes, or what they say sugar, as the old people used to say, because you're gonna come out there with too many things. Because not only do they have ice cream, they got every single type of candy you want, all types of popcorn you want. It is candy coated everything, pretzels, it's everything. You got Maggie Moo's, you have Minnie Maid Sweets, and I love Quintessential Sweets. Love them. And what's another one? I wanted to, yeah, that's it. But this is some of the few places, so it's a good local places to come get you some ice cream in Memphis, because it's summertime, and it's hot. It's 108,000 degrees outside here in Memphis. So like my dad said, Memphis is hotter than a pot of grits. And it hit Memphis. Did y'all know that Memphis is hotter than Houston most times? And Houston is hot. Houston is hot, but we've been hotter. So I want to talk about the homeowner. So if you are a homeowner, here are some top 5 key tips of being a homeowner, what you need to look out for and what you need to do. Make sure you're managing your finances, because of the fact that 54% of Americans are living paycheck to paycheck. We know that some of us have done that. You from H Town? Yeah, it's hot there, but check. I'm telling you, compare. Look at Memphis, and then look at y'all. You're gonna be like, you wish you was here. I mean, we wish we were there, because it's been hot here. We gonna get a cold front this week though. About time, because it's been like 110 degrees outside. So as far as, like I said, 54% of Americans live paycheck to paycheck. Just make sure that you are, you know, paying down those debts that you need to, those ones that hit heavy, your auto, your mortgage. Medical bills are not really a factor right now, but still just make sure you're paying your bills on time, because if you need to, um, if you need to refinance or do something like that, you need something for your house. You got to pull some equity out, unless you have is it IUL? I don't want to say it wrong, but it's an insurance product. I'm not an insurance broker, but if you have something like that, then you can borrow against that, and then you can be able to do what you need to do. But if you don't have that and you have equity in your home and you have late payments um, on your credit report, you're not going to be able to get your refinance money. So just make sure you're keeping up with that. Make arrangements. Call these people. Let them know sometimes things happen. You can get some good faith. Make sure you're keeping up with your utilities and your essentials and non-essentials. Just make sure you're having a budget each month. Some people need a budget each day because a lot of people spend a lot of money each day. So just make sure you fit something in your budget. As it's not as people just think that because you are a homeowner that you don't need to do the same things that you did before you became a homeowner. You need to keep up the same trends so you won't get into the same situation or get into a situation, because upkeep of a house can be much. So like I was saying, invest in upkeep and repairs and maintenance. Make sure that you got to think like an investor, right? So what are the most high dollar, high cost items for a house? Roof, HVAC, electrical, plumbing. Those four things are the highest cost of owning a home. So as an investor, rule of thumb is what you figure out what it's going to cost to replace something, and you take that times that by 10% and then divide it by 12. That's what you should save every month for each four of those items. So for instance, if you had the HVAC is average on $10,000. So 10% is 1,000 times 12, it's like $80 a month. So make sure that you're knowing how much these big ticket items cost. Depending on how big your house is, a roof can range in different range. Figure out know how much a roof costs. Hi, sister. Know how much a roof replacement costs. Know how much it will cost any major electrical problems, any major plumbing problems. And then, save for that. Make sure that you are inspecting your gutters and cleaning those gutters out. Make sure you check it for leaks and cracks if you have a basement. A lot of people don't have basements here in Memphis because we're in the flood zone. So make sure that you're checking for those different things and crawl spaces. Take care of the property. It's an asset. You should take care of it. You should love on it. If you have a septic tank, empty your septic tanks and do all of that. And just make sure you're changing your filters. Getting those. You're getting your air ducts clean, because cleaning your air ducts is so essential to your health of your family, because all that stuff that's gunked up and the dust and all that stuff that you see on your TV and all of that stuff, you should imagine what's in your HVAC system. So make sure that you are doing that. I don't know what happened with Groupon, but you used to be able to get some good deals on Groupon for that type of stuff. But you still probably some good deals on that. Think about safety and security. So make sure that you have lights, coming up your driveway. Anything, cover any dark areas, any blind spots, that different type of thing. But if you live in the country, you don't need security, then good for you. But make sure that you secure your home by just having good lighting, motion lights, cameras and things like that. Don't let things build up like clutter, things that's hard for you to move around or organize. Stuff in your gutters, overgrown trees and shrubs and, weeds and things like that. So that's something that you can do as a homeowner. Now, if you're thinking about selling your home in Memphis, Tennessee, and about to come from Mississippi too, here are some things that you can do in your interior since it's spring, and you can, kind of brighten up the place a little bit. So if you're thinking about selling your home, here's some things, some light things that you can do to prepare to stage your home. So, of course, make sure it's clear of clutter and all of that. But, you can swap your fabrics out for lighter materials and colors. Check your smoke alarms and fire extinguishers. Replace your HVAC filters. Check locks and consider installing surveillance. If you plan on leaving for the summer, give your house plants some TLC. Make sure you're dusting your ceiling fans and blinds. Check your weather strips and keep the cool air in, and then clean your windows inside and out. So that's just some things that you can do to keep, if you're thinking about selling, some tips, some things that you can just do without having to, spend a whole lot of money. That's just regular maintenance. Make it look clean. So now, for my first time home buyers, what shouldn't you do? Right? Let's talk about it. So 12 things that you need to, avoid. There's 12 mistakes and how to avoid them. So now figuring out how much house you can afford. That's a problem with a lot of people. A lot of people have champagne taste on a beer budget. Nothing wrong with that. I have high standards and high taste. I love nice things. We all do. We all do. But when you're shopping for a house, you need to know how much you're shopping for, because it's not window shopping. It's house shopping. So you don't want to go around looking at houses and getting your hopes up, and then you go to the lender and you get, approved for way less. And then, or you go and you're looking for something that, you get discouraged because you're thinking that this is all you can afford, when it's not true. So make sure that you're going to a lender first to figure out, well, first of all, make sure your finances is in order before. Don't waste the lender's time. And I don't like talking to people. I'm sorry, I'm about to be real transparent. I don't like talking to people when they say they want to buy a house, and then I'd be like, well, what's your credit score? They say, I don't know. You make it harder. Because if you don't know, that means you're not checking it, and any and everything could be on your credit at this point. So that's the first and foremost. And like I said, check your FICO score, Identity IQ, Experian, some type of site like that, not Credit Karma. Uh, Getting just one rate quote, that's a mistake. You can shop around. There's nothing wrong with that. But make sure that you're asking the right questions. And that's why it's essential to know your credit score. Ask the lender, is this going to be a soft pull or a hard pull? Tell them what your credit score is, and they might be able to give you a just about figure of what your rate would be. But you got to know your actual credit score, the FICO score, in order for them to do that. So, but also you just have to ask the right questions, because that can make or break your loan, or get you to get qualified for more or less. So make sure that you are, um, doing that. And also, all mortgage applications that's made within a 45-day window counts as one credit inquiry. So just be mindful of that. Yeah, know what your debt is too. you know, the higher your credit score is, the more debt you can have, but that means you better have some money. It's two. But the lower your credit score, the lower your percentage of debt to income ratio, unfortunately. But so if you're in that 45-day window, you can shop around for a mortgage. There's nothing wrong with that. It's going to be one inquiry. A lot of people don't like a lot of inquiries on their credit report, because it brings your credit score down. But the thing is, it only brings it down temporarily. After 3 to 6 months, an inquiry doesn't have that big of an impact. So just to FYI. So checking your credit reports and correcting errors. So things that lenders don't want to see. You can have a bankruptcy, but um, a bankruptcy holds your credit score down, you know, 50 to 100 points could be. But as long as it's 2 years after your bankruptcy has been discharged, then, they'll have you get a letter and get the discharge paper, all of that. So you can still buy a home with a bankruptcy on there. But if it's fresh, if it's less than 2 years, denied collections, charge offs, liens, fresh foreclosures. What else I'm looking for? Repossessions. All of those negative things are going to deter you from getting a mortgage. So you need to make sure you're clearing up those errors. Talking to a credit repair specialist. You do your due diligence. I do dabble in that. And, you don't have to use me. If you want to use somebody else, that's fine. But make sure that you are talking to somebody and making sure that you know what's on your credit report. A lot of times you know what's on there, you just don't want to address it. But you can't go out and buy a house if you don't address your errors that's on your credit report. You have to do that. It's not going to work. Um, so make sure that you check your credit reports. Now, there are first time home buyer programs, but it's always good to have money in your reserve. And what I mean by that is it's good to have at least 2 months of your, mortgage saved in the bank and just hold it there until you get your, you at the closing table and you got your keys. Have at least 2 months of your mortgage saved in the bank. It gives a good faith to the lender that you know how to manage and handle your money. And all it is just save. If you don't know how much your mortgage is going to be, just save the amount that you know you can afford, at least in there. And you still can qualify for those first time home buyer programs, but make sure you have some reserve because you do have extra costs that could, that you're going to incur. So you have closing costs, you have appraisal costs, you have inspections, you have earnest money, all those type of things. So you still going to have some money to bring to the table. So just make sure that you have that. Um, and if you can't save for a bigger down payment, the less your mortgage is going to be. But it's a way for you to be able to beat the interest rate by still doing the 3.5 or 3% interest down. You just got to learn what your amortization schedule is. Once you learn the amortization schedule, you'll beat that interest rate, and you can break down how much you need to pay. How you need to pay your mortgage each month. But that's another subject for a different day. So another mistake is not looking for first time home buyer programs. A lot of people think that there are none out there, but you're not researching that. You're not going to talk to lenders. It's all about relationships and asking the right questions. So ask the lender, what is their first time buyer programs? I know I have a lender that I use here. She has a zero down program. And if you qualify with your income, you could get your closing a grant for your closing costs. So it's so many different types of programs. It's another lender where they give you money back at the closing table. So you get money back for buying a house. So it's so many different programs out here. You just need to make sure you get with the right lender and ask the right questions. So ignoring VA, USDA, and FHA loan programs. You need to learn about these things. Read about them, research them. Or if you have a wonderful real estate agent that can tell you those things. USDA loans are used on places where they're considered rural. So if you're here in the Memphis area, guess what areas apply to that? Arlington, Lakeland, Millington, and I'm missing one. Oakland, right? Anything that has a population of 25,000 or less, or is it 50,000? Is it 25 or 50,000? I get it right, but they have a small population, and if they fit into that demographic, then you'll be able to qualify for that, and you'll have it's a better loan program. A lot of times it's 100% financing, so be mindful of that. So not knowing whether to pay discount points. So mortgage discount points are fees you pay up front to reduce your mortgage interest rate. Now, a lot of people are doing that. They're doing the buy down, like your mortgage rate. If you have the money to do that, that's fine. But if you don't, then you just have to see about making decisions quicker because interest rates are changing. So if making a minimum down payment to avoid this, if you're making a minimum down payment, it's the accomplishment. The choice is simple. Don't buy discount points. If you have enough cash on hand and the value of the buying points depend on whether you plan to live in the home longer, then the break even point. So that's what you got to think about when you are talking about that. Don't empty out your savings. That's why I said keep the money in there, store it. Applying for credit before the sale is final. I don't know how many people do that. Don't apply for anything when in this time you are trying to buy a home. I don't care. Don't apply for nothing. not a car, not a credit card, not any furniture. Wait until you get the keys, and you wait till the next day to finance anything. If you cannot wait 24 hours after you close on your house, you have a problem. Tell these folks, no, we cannot co-sign right now. No co-signing, none of that. Don't add nothing more that will change your debt to income ratio. The reason why? Because the lenders are going to check your credit multiple times through the process. And you don't want to lose your home at the closing table. It almost happened to me. Not because I added new credit, but something popped up on my credit the last minute. Chase came and I paid Chase off. I didn't owe Chase anything. They came back at the last minute and put a collection with a zero balance on my credit report. I was about to sign my paperwork for my mortgage. They come telling me like, we got a problem. Like, what's the problem? Oh, well, you got a collection on your credit report. I said, who got a collection? Because I know I don't. Because I know I paid off every single debt before I even moved to Memphis. And they said, oh, yeah, it popped up, today. So I had to get on the phone and chase it. Back then, wasn't nothing electronic. So they had to fax over the paperwork because they made a mistake. I almost lost my home because of that. So just be mindful. Don't get anything in your name using your credit during the home buying process. It will make or break you. Because if it changed your debt to income ratio, it could change the amount of house you can afford. And they will take the house away at the closing table. I've seen it. It almost happened to me. I've heard many stories. So shopping for a house before a mortgage, I kind of went over that. So just make sure you're talking to a mortgage professional. Underestimate the cost of home ownership. I just talked about that. Your maintenance costs, like I said, think like an investor because you are investing in this asset. Think about find out how much the biggest ticket items cost. 10% divided by whatever the 10% of that is, and then divided by 12, and that's how much you should save every month for that. And miscalculating repair and renovation costs. So make sure that you get an inspection. If you're buying a home like with the FHA 203K, make sure you get the inspection. Well, you're going to get the inspection anyway because they're going to have to. But make sure you get a contractor. Vet these contractors. Get multiple bids because you don't want anybody to give you any inaccurate information where you have to pay more because they want to charge you more, or you paying more because they didn't quote you for the right thing. So that's just some tips right there to avoid when becoming a home buyer. Well, during the home buying process. So talk about when you are my credit tip for today. I gave a little bit today. So 3 things to avoid so some people need to do the credit repair process, but still in all in credit repair process, you still need to, before you are able to buy your home, make sure that you are avoiding these 3 things. Applying for new credit, using over 30% on your credit cards, paying bills late. All of that can kill your credit score. Now, applying for new credit can kill your credit score because if your credit score is not high enough, because there's multiple problems with that, then you're going to try to get proof card of the card of the card of the card, and then it's going to look like to the lenders and things when you try to do something big that you are credit hungry. They don't like for you to look credit hungry. They like for you to be credit smart. So make sure that you're not doing that during the process. And if you're going to apply for a credit card or whatever the case may be, make sure that you are getting credit cards that will make your credit profile look good. I hate to say it is, but there are cards out there that, people, the lenders despise, the underwriters despise when they see your credit profile. Self-lender is one of them. I know a lot of people use it, but the same thing that you're doing with self-lender It's the same thing you do with your local banks. You just have to ask the right question. If you're doing a secured loan, you can do a secured loan at your local bank, and it'll look better. And you're building a relationship with your local bank. So when it's time for you to get your mortgage, they'll push you a little bit more, cushion in there. So, the First Premier is terrible. I'm sorry. I had to do it though one time before. First Premier is terrible though because first of all, the interest rate is high. Secondly, they charge you all that money for an annual fee. And third, it's like a subprime lender. So, it doesn't look good on your credit profile. Everybody is thinking about, oh, my credit score, my credit score, my credit score. These lenders are and these underwriters are going beyond and deeper than that. Your credit profile has to look stellar. You have to make sure that you're knowing what credit cards to apply for at which time to apply for. Using over 30% of your credit cards, your utilization is 30% of your credit score. So if you have high utilization, your credit score is going to drop dramatically. Trust me, I know. So make sure now when you're doing the home buying process, it's good to keep your balance at 6% or lower. But that's during when they're about to report to the credit bureaus. So find out when your credit cards report to the credit bureaus, spend it up, buy it up if you can pay it off. Because they want you to spend it. So you cannot just do $50 and then be like, if you got a $10,000 credit card, $5,000 credit card, or $1,000 credit card, you can't spend $50 and think like, oh, I spent on my credit card this month, and think that you're going to be able to. It's not going to make your credit score move. You have to use it and then pay it back off before they report to the credit bureaus. They will tell you when they report to the credit bureaus. Usually, when your statement date is usually the end of that statement date on that day, or 2 to 3 days before the statement date ends. So on your credit card statement, you will have the start of the cycle date and then the end of the cycle date. That's when you are buying up everything. But when they about to report 2 to 3 days before, you need to have that thing paid off 6% or lower. So just make sure that you're doing that when you're talking about the home buying process. Now, if you already have a home, you can keep it at 30%. It's kind of high. But if you're not really trying to buy nothing right now, then, it's okay. But the ideal rule is 6% or lower, or 10%. You can do 10% if you can't do 6. And then paying bills late payments will kill your credit score as well. But you can contact your creditors and do a good will letter, a good faith letter. And I don't know why my connection keep going out on Instagram. I got like 5. I should have went on my Wi-Fi. But you can get a good faith letter to them, and they'll remove the late payments from your credit report. But you can't be a habitual line stepper, people. Pay your bills on time. Make arrangements. You might be able to get a forbearance if you can't pay. They might take the late payment off, or you can negotiate something with them, but you have to communicate. So, whew, done educating for today. Hope that was good information. And if it was, I hope you would share it or take it back to your loved ones and share it with the ones you love, because people need to know this information. It's out here for everybody to know, to learn, and get with the right realtor. Make sure that you are making relationships with people. I appreciate everybody for coming on, and because all I want to do is add value to your lives and serve people. That's just what I want to do. So, like I said, go back and watch the replay. I did give you some tips. So go back and watch the replay. Take some notes if you want to. I know I might talk fast, but invest in yourself by educating yourself. Now, I'm here educating you, but the same things that I just talked about, if you want, don't trust anybody's information but your own. If you don't want to believe me, fact check me. And if I was wrong, come back and put it in the comments or send me a message. I don't mind being fact checked, but you better show me the facts. Bring me the article though. Don't be telling me what I heard and what somebody said. That's not gonna move me. I need to see evidence. Textual evidence, as I used to tell my students. Textual evidence. That's what I need. So I say that to say this. My name is Toria Howard. If you don't know who I am for any reason, but I am a realtor here in Memphis, Tennessee, and upcoming here in Mississippi. So I'm coming for you, Mississippi. I'm a commercial loan broker. I'm also doing business funding. So if you need any of my services, you can tap into my Instagram. My link is in my bio. If you on Facebook, my link is in on this live, and then I will put it in the comments section of my YouTube. So follow me on all my social medias. I got to do some more TikToks. I got some ideas. So I'm gonna put out some stuff. I just haven't had time. I've been so busy. People have been filling up my calendar. I'm so happy about that. People trying to get this money and get this education, and I really appreciate that. And people have been paying me for my time, even though I give complimentary um, consultations. People have still been paying me. I haven't been asking. People have been paying me because I'm giving so much value, and I appreciate all those people. So I say that to say this: tap into, invest in yourself, invest in your education, invest in real estate, invest in the stock market, invest in life insurance. People, get those high bearing, yielding interest accounts. Make your generational wealth from there. Okay. It's so much money out here to get. You just got to get the education to be able to do it. And like I said, if you don't want to listen to me, then fact check me. Do it for yourself. Read it for yourself. I'm about to read right now. Matter of fact, this is the book I'm reading. I'm about to show you because I got to finish it. I've been reading it for a minute. I've just been busy. Think and Grow Rich. It's an oldie but a goodie, and I never read it. So I'm going to give myself an hour to read this before I do anything else. Yeah, I can do that before I go to sleep. So I bid y'all adieu, and I'll see you tomorrow for Winning Wednesday. What up, though, to all my Detroit people? And talk to y'all later. Bye.